Good evening and welcome to Capital Market. I'm Temple Ashadju. Really good to have you join us on the program this weekend. One of the high points of President Muhammadu Buhari's administration is the establishment of the Presidential Enabling Business Environment Council, chaired by the Vice President, Professor Yemi Osinbajo, with the sole focus of removing bureaucratic constraints to doing business in Nigeria. And since the inauguration of the council in about this time last year, it has introduced a number of structural reforms initiatives to make it easier to start and grow business in the country, particularly for the micro, small and medium enterprises, as well as the latest in this development, which was seen recently, and that's the reclassification or reinauguration of the Privatization Council under the watch of the Bureau of Public Enterprise. Now, with this development, our attention is drawn to the implication of the council for the Nigerian capital market. And so later on the program, we will be joined by an analyst to spell out the possible impacts on the Nigerian capital market. But further on the program this evening, we'll bear our minds on the deepening crisis between Etisalat and a consortium of 13 Nigerian banks over a syndicated loan of about $1.2 billion granted the company by these banks. And other matters arising, such as the sell pressure in the equity market, as well as the leadership of the Debt Management Office, are also some of the areas that we'll be getting perspectives on this evening on capital markets. Let's now kick off the show with numbers they stand for this weekend. And first on the radar is NASD OTC, and with the USI standing at 654.42, it was up 1.73% this week, as the market capitalization came closing at 442.87 billion naira. Volume of transactions was at 98%, at 249.270 million, and the value of the transactions put at 30.691 million naira, having inched higher by 86%. Total deals is 83, and that's an increase of 19% against over what's traded for the week, for the 23rd week of the year. That's last week. Traded stocks are 13, and traded stocks are 20. And Friesland Campina Wamco leads the weekly trades by volume and value. Let's move over to the fixed income markets, where the FGN savings bonds tradable on the FMDQ OTC markets came in at 100.40, 100 naira 40 kobo for the value of 19.020 billion naira against the April 2037 security, and that took place in 11 deals. Total deals is 28. By the time you wrap up all other transactions or all other FGN savings bonds that saw transactions yesterday, and total value is 24.920 billion naira. In terms of the treasury bills, we saw the 28th September 2017, as well as the 7th of September 2017 all short-tenured bonds, as well as July 27th 2017 papers, having these numbers that you saw on the screen. There were some other trades on that platform too. All these figures for yesterday, and total deals of all the tradings on the platform yesterday is 264, valued at 72.466 billion naira. We go over to the equity markets. The market bucked 4 consecutive weeks of uptrend as the all-share index declined by about 5% to 32,122.14 points, driving the year-to-date performance lower to 19.53%, and that follows the broad profit taken across sector indices. Now, the market had opened the week on a bullish note with a cumulative gain of 1.66% in the first 2 trading sessions. However, profits taken ensued from Wednesday to Friday, with a daily average loss of 2.23% and cumulative loss of 6.70%. What these losses are attributed to will be made clear on the program shortly. But let's look at what the volume of trades came in at. 2.311 value is 24.577 billion naira in 27,836 deals. Top price gainers include Name It, Asheka Cement, Livestock, And on the flip side, we've got Transcorp dropping 23.12 points, followed by Joyce Bank, FIDSIN, as well as other companies that we've got. In terms of the top traded sectors, we've got the financial services, the conglomerates, as well as the consumer goods sectors of the markets. Now, the head of research at GTI Securities, Chukwuma Ayawu, a very regular person on our program, joins us now to give us his perspectives on what actually happened in the markets this week. People traded on Monday, they made money. People transacted as well on Tuesday, and they made money. All of a sudden, we're beginning to see, sell-off from Wednesday. Talk to us about what happened. What went wrong?
Well, technically, nothing went wrong. It's just respecting the normal market cycle. By the time you've noticed, like in your report, you pointed out that market has been up for consistently upwards of about 4 weeks.
Yeah.
And it's expected that at some point, profit-taking activities would kick in, which will see the bears coming back into the market. So what we're looking at is largely profit-taking activities, but of course there are also some macroeconomic changes that has happened. We've seen some pressure on oil prices, and based on that, a lot of the positives that we've seen coming into the market has been as a result of the fact that we got our FX strategy right. And if anything threatens FX supply, then of course it means that foreign investors will take a rain check before they continue, the aggressive acquisition of Nigerian instruments. So I guess what we're looking at beyond the fact that retail investors are actually taking profit now, a lot of the slowdown is also attributed to the fact that foreign investors might have slowed down a tad bit, just to make sure that they are still in line with expectations for earnings, dividends, and of course FX concerns would have probably kicked in as well.